are we ready to start? Can I get a thumbs up from everyone if you're ready to start this amazing session? It's going to be a loving the thumbs up. Thank you, everyone. It's going to be an amazing session. Good morning and namaste and a very, very warm welcome to all of you. I am your host and host, Reema Mahajan. I'm the founder of Indian Women in Dubai, as you all know. And at Indian Women in Dubai, we are very committed to bringing access to important topics for our community because things like entrepreneurship, things like investing, things like financial planning, these are all important aspects of our life. And we love bringing to you experts from our from our community so that we can all gain from their knowledge and expertise. Now, today's session is very relevant for everyone joining us today. Thank you so much for joining us. Many of us assume because you and I live in Dubai and UAE, we are not a part of Indian tax and legal responsibilities. Now, aisa nahi hota hai because although things have become simpler, you still cannot escape it. The tax laws are changing, compliance requirements are changing every time. There might be property ownership, which some of us might have. Some of us might be planning inheritance in India. And then there's cross-border income. So many things, come into the play. So it's actually more important to stay informed about the Indian NRI tax and legal requirements. And that's what this amazing webinar is all about. Now, the good news is when you have the right guidance, managing these responsibilities doesn't become overwhelming. It's actually easier that way. And that is why I'm very, very excited to partner with NRI Advantage today. And we have the leadership team from NRI Advantage today joining us. They are specialists in end-to-end legal, tax, compliance, and documentation services for NRIs around the world. So guys, stay till the end because we actually have an IWD special offer for all of you, but you have to, but there's so much more information, interesting things coming up, which we are going to share with you. Let me welcome the panel with me today. I'm very excited to welcome my first guest today, Mr. Janardan Singh. He is the CEO of India and partner direct tax at NRI Advantage. Thank you so much for joining us, sir. With his extensive experience in international taxation, corporate tax, expatriate taxation, transfer pricing, and cross-border advisory, he has advised multinational companies and NRIs on complex India tax returns for many, many years. So that's years of experience speaking in this room. Welcome, sir. Thank you so much for joining us.
Good morning, everyone, and thank you, Ms. Reema, for having us today.
Thank you, sir. Looking forward to a very interesting discussion with you.
Yes, same here.
Let me welcome my second panelist today. Joining us is Mr. Love Malhotra, CEO and partner legal at NRI Advantage. He brings deep expertise in legal advisory, including corporate and foreign exchange laws, compliance, documentation, and helping NRIs navigate India's legal framework with confidence. Thank you so much, Mr. Love, for joining us today.
Thank you, Ms. Reema. Welcome, everyone, and namaste to everyone from my side. Thank you. Thank you for joining us.
Wonderful. So Mr. Singh is in Dubai, but Mr. Love is in India. So it's truly a cross-border webinar that we are doing in today. And I know some of you are in India and some of you are in Dubai right now. Let's begin. I think we will give the floor to you, sir. So maybe we start with a little presentation if you have, if you want to just go through the basics. And then the format is, I have a couple of questions, guys, which I have planned for the team, which I will ask. But equally, I want to keep it very interactive for all of us. So if you have questions popping in your mind as we go through the discussions, we will take up almost every point related to Indian taxation. You can just type them in the chat box and I promise we'll take them up. Sounds good? So the floor is over to you, Mr. Singh. And the team, can we have the slides also up, please?
So thank you, Ms. Reema, for setting the... And on this day, on 22nd of July 2026, this day will be in my diary every time because this is the occasion when I'm meeting a Nari Shakti from India. So Bharatiya Nari Shakti. So it is always good to join and converse, to have such kind of conversation, even though it is a technical one, but we will try to keep it simple so that we can understand and we can understand and get clarification on the issues which are required. So for so before we dwell into conversation and provide the clarity on the compliances, we are running this presentation. In this, we are now going to give our attendees a short basic foundation understanding so that they can come to know that what type of tax and regulatory aspects they are required to keep in mind. If you have the basic understanding, then in that case it becomes easier for you to understand that what are the nuances related to tax and regulatory aspects related to India when you are abroad. So, next slide, please. So, we all know that we are known as a NRIs. NRIs, so first word is non-resident. So, the day we move from India, we think that we have become the NRI. But for tax and for the regulatory means FEMA perspective, there are two type of definitions for the NRI. So, it is not common. For the tax purposes, it is on the basis of number of days of your stay, physical stay in India. And for the FEMA, it is on the basis of the nature of your movement and the intent with which you are moving. So in the slides to come, my colleague, Mr. Love, will explain you from the FEMA perspective. Here, I wishes to explain you the basic understanding on the basis of which a residential status is determined for the tax purposes. So basically, as we all know that the number of days condition is there, and that is a basic condition to determine the residential status. So broadly, we can divide the residential status into two parts, resident and non-resident. So for that, the basic condition is 182 days. We all know that if we will exceed 182 days in India, we will become the resident. But occasionally we may have heard about the numbers, like even if we are not visiting India, there is possibility that we will become the resident for the tax purposes. Second, there is a concept of 60 days. There is a new concept of 120 days. So what all are these? So now the basic conditions have become a bit complicated. So one fundamental basic rule is 182 days. Other than that, there is a rule that if you are in India in a particular financial year, which starts from 1st April to 31st of March. If you are for 60 days, but in previous 4 years, you are in India for 365 days, even then you will become a resident in India. But there is a relaxation for Indian citizens and person of Indian origin. And earlier there was relaxation that this 60 days will be substituted by 182 days, means first condition will be relevant in our case. But now it has been shifted to 120 days. What is this 120 days? It is not coming automatically. 120-day condition will be applicable in your case only if you have India sourced income, which is up to 15 lakhs. So how you will get the India source income? It may be in the form of rent, interest, dividend, capital gain on sale of property, sale of shares. So if there is an income in a particular financial year of 15 lakh and you have completed 120 days and not 182 days, you will become the resident again in India. Apart from this, as we are from UAE mainly, so in UAE, there are no personal taxation and we are not liable to tax in UAE. In that case, a new terminology has been given by the income tax department, that is a stateless person. And if you are a stateless person, then your motherland is there and they have the right to tax you as a resident. So that is known as a deemed residence concept. So broadly, we can say that there are three types of residency from tax perspective: non-resident, resident but not ordinary resident, and resident but ordinary resident. So in coming slides, we will see that what is the impact of these residential status. Move next. Yeah. So once a residency is determined, which is the foundation, then comes the scope of income. It is not the case that in case of non-resident, every income will be taxable. India says that only India's first income we are going to tax. So what is the difference between non-resident and resident but not ordinary resident? So there, in case you have any business or profession which is set up in India, but you are in Dubai, again, that income will be taxable in India. But in case you become resident and ordinary resident, then in that case, your global income will be taxable. Even if it is not taxable outside India, the Indian government has right to tax that. And if it is taxable outside India on the basis of residency, then in that case, you can claim the tax credit for the same. So it is a bit complicated, but once you have that kind of understanding, you will easily come to know what is your residential status in this particular financial year. So I have broadly categorized here that what kind of income is taxable and what are exempt and what are the rates. So salary and rental income, if you are getting from India, for example, even if you are in Dubai, but you are getting some salary from India. So there is a possibility that that will be taxable that we have to analyze on the basis of tax treaty between India and UAE. Rental income is fully taxable there. NRI and FCNR interest. As we all know that there are three broad kind of bank accounts once we become the NRI. NRO account, NRE account, FCNR account. NRO account interest is fully taxable, but NRE and FCNR interest is exempt in India. Now, if we sell listed equity shares, then tax rate is now 12.5%. We will analyze in further discussion that how it is going to impact us. And this 12.5% seems simple, but due to the tedious obligation in India, sometimes it becomes a very critical thing for all of us. Then is the short-term equity, listed equity shares gain is 20% taxable, and immovable property is 12.5%. But in case of listed shares, basic 1.25 lakh is exempt, and any income in excess will be taxable at the rate of 12.5%. Now comes the tax treaty. So we know that India and UAE has the tax treaty, and it is very good tax treaty, and both the sides have considered the aspects, and it is sometimes I have seen that it is beneficial in case of non-resident Indians. So there is a tiebreaker rule. Even if you are becoming tax resident as per the domestic law of India, Income Tax Act, but there is possibility that as per the tax treaty, you may become tax resident of UAE. So that we have to check, but that benefit you can't get automatically. You have to obtain tax residency certificate in Dubai. You have to file Form 10F, and now it has been changed, and new form number is 41. And in case there is any tedious obligation which is arising in India, you have to file for the lower tax residency or lower tax withholding tax certificate. So that also you have to keep in mind. Move next. So now this is the final slide from the tax side. So there are few main due dates which you have to keep in mind. In case after considering the TDS, your tax liability is more than 10,000 in India, you are required to deposit advance tax. And there are four installments which are there. First installment is 15 June, second is 15th of September, third is 15th December, and then final installment by 15th of March. We all know that we are individual, and in our case, income tax return filing due date is 31st of July. So this time it is very near, 31st July 2026, we have to do our income tax return filing compliances in India. If we miss this deadline, we have to pay a fee of 5,000 in case our income is more than 5 lakh in India. So there are various income tax forms in India. So ITR 1 is the simpler one, but in case of non-resident, it is not applicable. So in your case, it is ITR 2 and ITR 3 is applicable. ITR 3 is applicable only when you have business income in India. On NRO interest, the withholding or TDS rate is 30%. It is on very higher side. So you have to keep in mind that whenever you are having any kind of NRO interest, so you must take some professional support so as to consider it properly and avoid any excess tax payment. Likewise, there is everyone knows that in the news there is sometimes people says that now in India up to 12 lakh income is exempt. There is no tax which is required to be paid. But that is not applicable and that relief is not available to NRIs. So that we have to keep in mind. So, and in India, there are two types of tax regime, old regime and new regime. In old regime, you are eligible to claim all kind of investments, all kind of deductions which you have. But in new regime, even though these deductions are not available, but most of the time it is beneficial in most of the cases. So now for the regulatory aspect and legal, I would hand over to Mr. Love. Move next.
Hello, everyone. Yeah, you were saying something, sir.
No. You continue.
Thank you, Mr. Singh, for such an insightful section, as always. So now I would like to share my views and thoughts from the foreign exchange laws perspective. As mentioned by my colleague, residential status of NRI under tax laws is quite important for applicability of tax. Let me tell you that residential status under the provisions of FEMA, or what we call as foreign exchange laws in India, is nothing less important. So whenever an Indian citizen becomes resident of an overseas country like Dubai or any other country, the provisions of FEMA would come into picture. Now, as you can see on the screen over here, as per FEMA, there are 4 key operational areas: cross-border movement of money, overseas investments, foreign exchange transactions, and repatriation of funds. Meaning thereby that while executing any transaction, if any of these 4 areas are triggered, very simple, FEMA provisions would strictly apply. So what's the thumb rule? Thumb rule here is that your FEMA residential status determines which bank account you may hold and operate as an NRI. So this FEMA residential status, let me tell you, is entirely different from what you call as nationality or citizenship or tax residency, which my colleague just explained. So you can be an Indian citizen, but from a FEMA perspective, your legal status immediately changes the moment your jurisdiction changes, irrespective of the fact that you moved outside India for employment, business, or indefinite stay. Let me explain this with few examples. So consider an Indian citizen employed in Dubai or an Indian student going for a master's degree for 2 years, let's say in US. So we all know they both are Indian citizens, but due to their physical relocation in those countries, as per FEMA, they are termed as person resident outside India. Consider another example. Let's say a German national visiting India on an employment visa for a job purpose. He is technically an expatriate, we all know that. But under FEMA, he will be regarded as a person resident in India. Another case could be if NRI thinks of coming back to India permanently. So in that case, it is quite obvious that he can't just keep his overseas savings, which he have earned there, in foreign currency, in his own foreign currency account maintained in that country. He has to convert this and open a resident foreign currency account, which of course I'll explain in the next slide. So let us now move to next slide to have a quick look at the foreign currency account which are available for NRIs. So as you can see on the slide, there are primarily 4 types of bank accounts based on currency, ease of repatriation, and user eligibility. Now for NRIs looking to manage funds in Indian rupees, we have NRI and NRO accounts for you. The difference between both of these actually lies in repatriation only. So while NRI accounts hold foreign earnings converted to Indian rupees and are fully repatriable, on the other hand, NRO account would manage the India sourced income for meeting the Indian expenditures, and if a repatriation is required to be done, it can be done, but subject to strict regulatory requirements of RBI. Another bank account option would be FCNRB account, which basically eliminates exchange rate risk entirely, as it allows NRIs to hold fixed deposits directly in a foreign currency, which of course remains fully repatriable. I'm sure we all must have heard about a recent notification coming from RBI in the month of June this year, which has allowed NRIs to maintain their fixed deposits for a tenure of minimum 3 years and maximum 5 years during the stipulated period starting from 8th of June till 30th September. So the thing is that this is something not new, but why this new notification has come up? This new notification basically talks about the fact that if you want to convert your Indian rupees to foreign currency and maintain that in a form of term deposit, the swap rate, which was earlier charged by AD banks, your authorized dealers banks, is now waived off. How this is waived off? Because they are getting it internally waived off from RBI. So the benefit is being passed to NRIs. So this FCNR is again a very good option where the money becomes fully repatriable as well. And finally, for a returning residents, as I said in the previous slide, the RFC account is an essential tool. It allows NRIs who have permanently returned to India to maintain their hard-earned overseas funds in a foreign currency with full repatriation flexibility. Now, honestly speaking, it may not be easy for people to conveniently recall these legal frameworks, isn't it? So I think we should have a decision rule. Now, what's that decision rule? The decision rule, as you can see on the screen, has basically 4 vital questions. First is, am I a resident or a non-resident? Is the income being generated in India or outside India? Do I need repatriation flexibility? Do I want to avoid exchange rate risk? So all these questions would give us a clear indication of what exactly we are supposed to do as an NRI in order to comply with both tax regime and foreign exchange laws. Now let's quickly look at some of the most common compliance mistakes that NRIs make while investing or doing business in India. Next slide, please. Now, first of the lot is, which is the most common mistake, is investing from a wrong bank account. Now, one of the most common mistake is choosing an NRO account instead of an NRI account for making investments not in India, overseas. So a lot of people feel that there are various permissible credits in NRI and NRO account, and both can have same type of fixed deposits, same type of nature of accounts. Then why the investments cannot be made from NRO account? Because NRO is centric towards more India-centric income and not overseas income. That is why if you want to make investment overseas, you have to use NRI account. Next is again as common as the first one, which is ignoring FEMA reporting. Now let's say an NRI opens a company in India or a LLP, and he wants to make a foreign investment in India. So, as a part of the reporting requirements, there are certain forms called FCGPR and FCTRS, which are required to be filed for the capital infusion and maybe share transfers from resident to non-resident or from non-resident to resident. Now, if you miss these filings, it can result in penalties and compounding offenses. And needless to say, a lot of effort as well. Next is buying agriculture land illegally. Now, we all are quite aware that NRIs are generally not permitted to purchase agricultural land in India. Investing without verifying land use or obtaining the required approvals can thus lead to serious legal consequences. We all know that, but we still do it based on the presumption that we can get the land use changed. But this has to be done prior to purchasing it. So these are few small mistakes or steps which you need to follow as an NRI in order to have a complete abandoned caution. Next is again relating to property, skipping due diligence. So before purchasing any property, since we are overseas, we sometimes fall into the trap of brokers who say that the property is fine, I have checked it myself, everything is fine. But it's pretty important to always verify the title and whether the property has any mortgage or any legal encumbrances or not. So in order to have a peace of mind, I would, as a professional, always advise my NRI clients to have a property TD through a professional so that you have a complete peace of mind and you know that the title is clear, marketable, and unambiguous. Next is missing ROC filings. So let's consider if an NRI has a corporate business structure in India. As per Companies Act, there are certain compliances to be made to the regulator, which is Registrar of Companies. In case you miss it or you delay it, the company would definitely be subject to penalties. And in addition, there will be penalties on directors and can also lead to directors' disqualification. Now, if this goes to this level of disqualification of directors, let me tell you, the process of regularization is not that simple. You have to go to NCLT to regularize it, which is a task of its own. And of course, would involve a lot of effort and cost. Next is wills. A lot of people feel that we have got the nominations done, so is there a need of drafting wills? Well, if NRI does not have wills, his or her assets, let me tell you with very clear indication that it would be divided as per the government succession laws in India and not in the manner in which the NRI himself or herself wants them to be. So the choice is yours. What do you want with your assets? You want a simple division as per the laws, or you want this to be given to your near and dear ones whom you feel you want them to be? So next is improper investment structuring. Now, as an NRI, we always want investment to be made in India and outside India. But in order to structure them properly, it's always advisable to comply with the foreign exchange laws, that is FEMA, and tax provisions, especially the double taxation avoidance agreement, in order to have proper tax planning. Else he or she will end up paying more taxes than he wishes to or he needs to. That's it from my side, from the FEMA angle. Over to you, Ms. Reema.
Thank you so much. Thank you, Mr. Singh. You wanted to add something?
Yeah. I want to add on the point of will, as Mr. Love mentioned, that every NRI has to plan for their properties and assets by way of drafting the wills. But they have to draft two wills, one for the India and one for the UAE related properties. So for if you are in UAE or in Middle East countries, you have to prepare a separate will for Middle East regions related assets. Why it is important? Because otherwise Sharia law will be applicable, local laws will be applicable. So please keep this in mind. I have seen and I have interacted a lot of people, and they are very happy that we have that will in place. But when we asked about the will, they cover each and everything in the India will itself. So you have to keep these two wills separately, so that in future your legal heirs will not face any kind of issues. Thank you.
Thank you, Mr. Singh. Thank you, Mr. Malhotra, for the enlightening presentation. I am actually now going to move to more interesting panel discussion now, because I have a few questions for you. I want to make sure everybody is awake. Team, can we take off the slides and put the panel on? Yeah, thank you. If you have a question, everyone, give me a thumbs up, one, to make sure you're awake. And if you have a question, can you type it in the chat box, and we'll promise we'll take most of them up. Great. Loving the thumbs up. So I know everyone's there. Let me start with you, Mr. Singh. My first question is, you've managed, you worked with thousands of NRIs here. What is the biggest misconception that you've seen amongst the NRIs? How have the laws evolved in the last couple of years? And what would you recommend people to not miss? The biggest tax myth that you've come across?
So to be very frank, in my 2 decades of professional experience, I met a lot of NRIs, and they have one common misconception, that once they become the NRI, so they always talk about that now we are not required to comply with the tax and other regulatory aspects in India. So, but let me very clear that your roots will not leave you, and they call you again and again. So you have to keep in mind, you have to consult, and you have to look prior to entering into any transaction, any repatriation, or any kind of arrangement related to India. In case there is anything which is required to comply from the tax and the regulatory aspect, please do that, because even if you are NRI, your India sourced assets, inheritance, and investments are required to do the required compliances in India itself. So please be aware of that. Please come out of this mindset that once we are NRI, we are not required to do any kind of compliances in India. And as mentioned by Mr. Lowe, that I have seen a lot of our NRI friends, they still maintain the saving bank account in India. So when we talk about the NRO, NRE, FCNR account, so they are either not aware, or if even if aware, they says that we do not want to complicate things. We are keeping that saving account, and we are continuing with that. But that is a non-compliance from FEMA perspective. Yesterday also I met two of my friends in office, and four of my this clients, where they told me that we still have saving bank account. So I told all of them that please shift it from saving bank account to NRO account. So these are the misconceptions, and these misconceptions can be removed only by way of awareness.
Thank you for helping us spread that awareness. So for everyone on this call, if you register today, 31st July is only a week away, basically. If you register today, we have an IWD special offer. The website name is nriadvantage.com. And if you mention IWD, there's a WhatsApp number also. The team, can I request you all to share the WhatsApp number on the chat box too, where you can set up a one-to-one consultation with the team of NRI Advantage. Now, I'll come to you, Mr. Malhotra. When I think compliance, I actually think it's only for companies. I am an individual NRI, right? What does staying compliant actually mean to you?
Ms. Reema, it's a very good question. Not only you, but most of our clients feel that compliance is just a burden. But let me tell you, it is in reality, it is just a mechanism of mitigating your financial risk, nothing else. Now, you're right, there is a misconception that people always feel that only compliance is required to be done by businesses or when you have an entity set up. But it's not the case. even when you are a individual NRI, you are just required to follow tiny but organized steps. My half the job is done when my colleague Mr. Singh has already explained the kind of things which you are supposed to do as an individual. But just for the purpose of carve out all sort of confusions and bring more clarity to this concern of yours, I would say the first step is as simple as check your tax residency status every financial year. So what people do wrongly is they do it once in a year, but then for next 2 3 years they just forget it. I mean, I understand everybody is busy with their own work, but then there are only 2 3 things. If you do it adequately, timely, I think this would help you to save a lot of your cost on, you know, uh, incurring penalty or getting into trouble of hiring professionals for curing things rather than hiring them for helping you to get things done from you. So that's a difference. So second step, as I said, would be to re-designate the saving account, which Mr. Singh just mentioned. A lot of people still feel that you have a saving account in India. Who is checking it? See, RBI, because of the kind of overload transactions happening cross-border with cross-border travel, has delegated a lot of its power to AD banks. So everything is now moving through banking channels. We all know that. And in India, this with this UPI transactions, everything is visible to everyone. Yeah. So redesignation of your saving bank account to NRO account is very, very essential. Third, I would say file your income tax returns every year as and when they become due. Even if you have, TCS, there may be some situations where you are still supposed to file your returns in order to claim refunds, in order to have treaty benefits, in order to report your income correctly. Fourth step could be maintain documentation. In order to substantiate your authenticity of transaction before the regulators, be it RBI, AD banks, income tax department, or GST department. So these are just 3 4 small steps which, if everybody can do it, I think you will have a peace of mind. And in case you still require some clarity, we as an NRI Advantage are more than happy to give you complete handholding.
Beautiful. Thank you, Mr. Malhotra. I hope everybody's remembered the 5 steps he's mentioned. And again, just to hydrate, nriadvantage.com is the website. Also, the recordings of this webinar will be available very, very soon on YouTube in case anybody wants to go back to these steps. So, we will make everything available. I want to come back to you, Mr. Singh. We have over 100 people in this room, 105, 106, right? I know you explained it in the slides earlier, but I will tell you this is one of the most confusing topics we come across, which is what is my residential status, and how does it affect taxation? So if you can explain that section again in very layman's language, somebody like me who doesn't understand law in the technical terms, I would love everybody in this room to walk out and with an understanding of what actually is their residential status.
So you asked a very relevant question, because if the foundation is correct, then only we can plan other things. So for the income tax purposes, residential status is the most important thing. And for the sake of understanding, I would say that keep it very simple. First of all, decide whether I am a resident or non-resident. When I will become a resident, there are 2 broad conditions. One, everyone knows that 182 days in a particular financial year. 1st April to 31st of March, if I have completed 182 days, I will become resident. Second is, if I have completed 120 days and my India source income is more than 15 lakh, then in that case, I am resident. And third condition is, if I have completed 60 days and my previous 4 years are more than 365 days. But in case of Indians, and person of Indian origin who have visited India either for the purpose of only visit or have left India for employment purposes. In their case, 60-day condition will not be applicable. And last condition is that in case I am not taxable in any part of the world and I have 15 lakhs or more than 15 lakhs of income in India, then in that case, I am resident for tax purposes in India, even if I have not traveled to India for a single day. So this is the basic 4 steps by which we can determine our residential status. Once I have become the resident, then comes whether I am a resident and ordinary resident, because shifting from a normal resident to ordinary resident is very crucial and critical, because then your global income comes into taxability framework. And there are 2 conditions to determine that. One, out of last 10 financial year, you are not resident in at least 9 years. And second condition is that in last 7 years, you have not exceeded your stay 729 days in India. If these 2 conditions are not satisfied, then you will become a resident and not ordinary resident. Otherwise, you will become a resident and ordinary resident, and your global income will be taxable. You have to report all your income. Yes, you can claim foreign tax credit, whatever tax has been deposited or withheld in outside India, that you can always claim. So these are the golden rules for the residency determination.
Thank you, Mr. Singh. Very, very helpful. I hope everybody is more clear now on what is their residential status. I'm going to move on to the next question, which I've actually picked up from the chat box. How many of you own a property in India? Can you give me a thumbs up if you are on this session and you have a property in India? There you go. I love the thumbs up coming. And my next question is regarding that. So a large number of our audience, as you can see, owns property in India already, or some of us are actually planning to buy for investment. What tax and legal responsibilities do we have? I'll come to you, Mr. Malhotra. What tax and legal responsibilities do we have as an NRI property owner? If you can cover some of them, that will be amazing.
Thank you, Ms. Reema. I actually wanted to take this question if you have not given it to me.
Over to you, all yours, sir.
See, I mean, we all know that Indian government is focusing quite hard on infrastructure development in India. Yeah. So investment in real estate is bound to happen. So is the case with NRI. Now, you're right. A lot of people have interest in making investment in properties, but again, just few things they need to do in order to have abundant caution in terms of the documentation and other compliance aspects. So I would say, in my view, first step would be, as an NRI, we need to check our permissibility under foreign exchange laws. So let's say we want to look for a investment for a residential property or a commercial property or farmhouses or anything else. So the type of account to be used has to be identified accordingly. Second is, which I have also covered in my short presentation today, to have a proper title DD in order to have a clear, marketable and unambiguous title, so that we are clear that there is no issue in the title. Third is, if after purchase of property, you want to give it on rent, of course, apart from having a proper lease deed or rent agreement, we need to understand that, as an NRI, if you receive the income of rent from India, the buyer would have withholding tax obligations in this case. And similarly, from NRI perspective, you are supposed to file an income tax return to report that income. Yeah. Fourth step would be uh, adequate documentation, such as, if you are purchasing it from a builder or a developer, then builder buyer agreement. If you are buying it from a authority in India, let's say uh, Rajasthan government, then of course RICO is the right authority. Then you'll have a allotment letter, not a sale deed. Thereafter, because they give you a right to use that property for 99 years. So it's a 99 years lease. Maybe in that case, title DD is not that much required. But if you're buying it from a builder or a flat which is already having a second or third owner, title DD becomes very important. Fourth is documentation, as I said. So these documents, allotment letter, and any inheritance documentation, valuation reports, all these things put together has to be maintained to have a proper chain of documents, because you're sitting in a country outside India. So what you have as a matter of your peace of mind is only documentation. So this really requires a lot of caution. I hope I'm able to address your query.
Yes, thank you very much. That's very helpful. Hopefully, that clarifies a lot of the doubts. But I have a follow up question. So I'll come to you, Mr. Singh. Some of us already own properties in India, and we've heard horror stories that once we sold the property, the money that I received in my bank account was way lesser than what I had expected. Why does it happen?
So the main reason is that while selling any property, we all focus on the amount of sale consideration, negotiating with the buyer only. But apart from that, we have to focus on some tax related aspects, because on buyers, there is obligation in India. If they are purchasing any property from the non-resident seller, then in that case, they have to do the TDS compliance. And that also on the higher side on conservative basis. So it is the duty of the seller, NRI, to obtain lower withholding tax certificate from the income tax department. Otherwise, what happens on conservative side, because buyer is not in a position to calculate your capital gain, that what actual gain you are going to make from this transaction. Okay, sale minus purchase value. So they make withholding on the entire or gross sale consideration. Okay, but in case you file or apply for the lower withholding tax certificate, you will submit the details to the tax department about your sale consideration, your purchase details, everything will be mentioned, your other income tax obligation in India, and accordingly you may get relief from by way of this certificate by way of lower withholding tax rate. If you will submit and file this with the buyer, then they will deduct less. Otherwise, they are bound to deduct more. And that is the main reason why NRIs gets lesser amount in their bank account in this sale of property transaction.
Wonderful, guys. I think important point to note. So if you're selling a property, please keep this in mind. Let's make sure the audience is awake. Can I get a thumbs up or a yes in the chat box if you are still there and listening to us? Great. Keep it coming. Okay, I am trying to cover almost all the areas of that we can talk about. So I'm trying to keep the questions very generic. If you have specific questions regarding your personal situation, I would highly recommend you to book a call with the team. My team is going to share the number, and the website is also there. I'll move on to my next question, Mr. Singh, and that's for you. Now, some of us already own property in India. We have cross-border income of different types, rental income ho gaya, business ho gaya, investments ho gaye India mein. What should we keep in mind for managing both the jurisdictions, UAE and India, correctly? What do we as NRIs need to know today?
Very relevant question, and this is in continuation to, as I mentioned, that you are required to maintain two wills. So likewise, if you are present in two jurisdictions, You have assets, you have properties, you have income from two different jurisdictions. You have to maintain proper documentation. You have to comply with the local laws of both the jurisdictions. Yes, there is tax treaty to give the beneficial relief between India and UAE per se, but that again we have to analyze with the support of professionals and then come to know that whether any beneficial provision is there, and in case there is anything which is beneficial, you have to do certain compliances, because these treaty benefits are not automatic. You have to obtain tax residency certificate, file online forms, and then claim that before obtaining any benefit for the same. So I would recommend that considering your residency, you have to keep in mind if, for example, in case of NRE and FCNR interest, NRI says that this is exempt and they are happy that 100 rupees if they are getting, that is with them. But they have to check in their resident country whether it is taxable or not. In case of UAE, it is very simple because in UAE, there is no personal tax. But if NRI is in Singapore or US, they have to keep in mind that if it is not taxable in India, then there is a possibility on the basis of residency, it may be taxable in Singapore or US per se. So that they have to keep in mind proper documentation, proper determination of residential status, determining your scope of income, which is taxable in India, which source of income is taxable in outside India. That you have to keep in mind.
Wonderful. Thank you, Mr. Singh, for that. Mr. Malhotra, I'll come to you. And this is a word we've heard so many times in this webinar now, documentation. Okay, we've said that documentation often it gets overlooked. We as NRIs don't know what are the financial and legal documents required. Can you give us a simple list or shed some light on this? What is the documentation I need to keep in mind as an NRI?
Yeah, you're right. This is quite important for all of us to understand. See, because there are various cross-border transactions these days. So, first of all, as an NRI, we should focus on identification and residential status documents. So, what those documents would be: copies of visa, residential permits. If I'm talking about UAE, then maybe Emirates ID. Then there could be other travel documents or any permits, depending on which country we are living in or the country which we are working for. Next could be, documents relating to banking and investment. So all our fixed deposit receipts, insurance policies, demat account arrangements. If we are investing in a company as a part of share capital, then share certificates. These are preliminary documents for investment and banking purposes. Third in my list would be property related documents, which I have kind of explained earlier as well. All the allotment letters, valuation reports, anything relating to, in case you have sold the property to someone or you have gifted the property to someone, those gift deeds, in order to maintain a complete chain of, property. That is quite important. Fourth in my list would be relating to tax and regulatory overall. So maybe tax residency certificates, all your advanced tax challans, TDS returns, income tax returns, and things like that. Last but not the least, and in fact gains the utmost importance, is estate planning documents. So copies of the wills, power attorney, in case you have anything being issued in your favor or you want to issue in somebody's favor for all the financial assets or properties. The next could be relinquishment deed in case of demise of a near or dear one. There could be survivor member certificate. This is again related to mutations and all. So this looks very common, but then if somebody near to our dear ones have suddenly expired, then all these things have to be arranged in order to have proper demarcation and distribution among the relatives and the legal heirs. So these 5 categories of documents would be part of my bucket list as an NRI.
Thank you, Mr. Malhotra. I hope everybody, I can see people making notes with pen and paper. I hope everybody is saving those 5 types of documents we all should keep a note of. Thank you, Mr. Malhotra. I'll come to you, Mr. Singh. And I think this is a topic which is very close to my heart because I talk about it a lot, which is financial independence of women. And, a lot of the cases we hear stories where, the spouse is managing all the finances, taking care of the documentation, the investments. The lady of the house sometimes or a lot of the times doesn't have much idea about where is the money going, where are the investments, which is it. How common is this in your experience, in your personal experience, years of decades of experience you have in the industry now? And what should every woman on this call know about it?
So you have rightly mentioned that this kind of cases and situations arises in our society because in Indian society we divide our work in the family, and mostly finances are kept with the male members of the family, even if the female member is capable of doing that. So I would not say that you should go home and ask that please give this work and task to me and now and going forward, but at least financial awareness should be there, because if you have that kind of financial awareness, by that way you can support your family in understanding, in guiding them, in taking them the informed decision. For example, if male member of the family is managing everything, but you have that kind of financial awareness, you have basic understanding of residency, you have basic understanding of the nature of bank accounts, documents required to be prepared, that basic understanding if you have, then you can manage and support them. And in case they will feel, means in the family, they will feel that you are more aware, then they may hand over this kind of work to you. But even if you are not taking this kind of charge in your hand, at least in the families, please sit and discuss about the financial things. Make a record of your financial documents, share with everyone that where all these documents are kept. Nowadays most of the things are available online. Share with each other the key details, user ID, password, and identify the key compliance dates. At least this much you can do, because I have seen in my personal this networks that this kind of situations arises, and it becomes very difficult for the surviving members of the family to cope up with such type of situation, and the money and the assets belongs to them, but they are not aware about that.
Thank you, Mr. Singh.
Mm.
For every woman on this call, I think this is an urge. I think you just need to know where your family finances are. We're not telling you to take step, but you should be aware what properties you own, where are your investments, where all of that. At least have an idea about it. And for every men on this call, please make your partners equal partners in the financial decisions also. Thank you. I have another round for both of you, which is going to be faster and more interesting. But before that, I want to ask Mr. Singh, what exactly is NRI Advantage? Please tell us more about this and your mission. And I know you are in Dubai, you're visiting Dubai this week. So I'm very honored to be meeting you. So tell us more about about this mission and vision of yours.
So actually, when we talk about NRI Advantage, so it is a trusted single window support platform for NRIs to manage their tax, legal, regulatory, and business related compliances in India with ease and convenience. When we say ease and convenience, how we are going to provide that? By way of digital communication, we provide virtual consultation as well as in-person meetings because we have offices at both the locations in UAE and in India. In India, we have entire team, dedicated team, having decades of experience of dealing with the NRI related issues. And in UAE offices, we have offices in almost all Emirates, and we have this kind of India desk in our offices where in case you wishes to visit in person, you can meet with the India desk person. They can connect with the India team, the dedicated technical team, and we will provide you the best solution possible. Uh, One more thing I would like to highlight, that when we created or built this brand, NRI Advantage, we were already providing these kind of services through our main brand, MBG Corporate Services. But the need why this has arisen is that we have seen that a lot of NRIs faces challenges, and then we kept in mind, we discussed internally that a dedicated service vertical should be created so that NRIs can easily manage their India assets, investments, inheritance, and business activities while staying abroad, and they do not require to travel back for these kind of compliances and meeting with the multiple service providers. And even if you have seen the newspapers and the media reports, you have seen that in India, tax and regulatory provisions are rapidly evolving. Every month there is a notification. Even for the professionals, sometimes it becomes very difficult to keep pace with that changes if you are not have that kind of mindset and attitude. So it was required by the NRIs. Many NRIs have requested us to create such type of things, and we have come up with this solution. And NRI is here to provide a dedicated expert solution to the NRIs for all your problems. And one important thing I would like to highlight here, that whenever you will contact us for any issue or any transaction, we will not analyze your that transaction on a standalone basis. We are going to review that from a comprehensive point of view, from all aspects, from tax, legal, and any regulatory aspect which requires to be analyzed, and then come up with an integrated approach. And that will be practically implementable. That is not going to be something that we have advised from the tax perspective, and when you say that it is not practically implementable from FREMA angle, sometimes service provider says that we have done this from the tax angle only. So we will do a holistic this approach, follow holistic approach at NRI Advantage.
Wonderful. Thank you, Mr. Singh. And guys, everybody on this call, 31st July is your deadline. I'm hoping most of you have, but if you haven't, you can reach out to the team. There's a WhatsApp number there, and the website is also called nriadvantage.com. Check it out. And we have an IWD special offer, as always. Yeah. So make sure you mention IWD when you reach out to them. I'm going to move on to my next round, Mr. Singh and Mr. Malhotra, which is a quick one, okay? Firebuster, let's bust some myths in here. Very quick questions for you. Mr. Singh, do all NRIs need to file tax returns in India?
It depends.
Okay. Mr. Malhotra, can NRIs keep a regular savings account in India?
No.
So NRO and NRE, guys. Okay. Mr. Malhotra, another one. Should every NRI have a will?
Should every NRI have a?
Have a will?
Well, yes.
It depends.
Here and in, it
Let's say
depends.
it depends.
Okay, great.
It depends.
It depends. Okay. Mr. Singh, is rental income earned by NRI from India taxable?
Yes, definitely.
Okay. Mr. Malhotra, is the power of attorney, and this is something which we didn't mention, so maybe you can spend some time on this. Is the power of attorney valid forever?
No, not at all.
Okay. Wonderful. Also, is the nomination the same as a legal inheritance?
No.
Yeah. Okay. And my final one, Mr. Singh, is can someone be an NRI and still pay tax in India?
Yes.
Thank you. Thank you, gentlemen. It's been fantastic talking to you. For everyone in the audience, I hope I've covered most of your questions. If not, I would recommend a one-to-one consultation with the team because your personal situation might be different than everybody else. But I would like to leave and finish on a positive note. And one final question for both of you is that if you were speaking to a family member living overseas, or if you were speaking to Indian women in Dubai, which we are all based in UAE, what are the three things that you are going to recommend them to do today so that we are all financially and legally prepared? And I'll start with you, Mr. Singh, and then we'll come to you, Mr.
Yeah.
Malhotra.
Yeah, so I would ask them to sit with your family, prepare a map of all financial details, that what all assets we have, and what liabilities family have, and what kind of documents are there. And after preparing that financial map, please try to understand that what kind of compliances is required to be done. And then once you get that understanding, please discuss with the family again that as per my understanding, these are the compliances which we are required to do. Please be involved in your financial matters. I do not say that you are not involved. You are independent, and you are today's woman, and we all expect that you are involved in each such type of activities, because when we discuss about women's in India, so we always says that women can do multitasking with full efficiency. And because people says that if a person is doing multitasking, that person is jack of all and master of none, but the women's are exception. They can do multitasking as well as master all the activities. So you can master financial awareness and financial this understanding also.
Thank you, Mr. Singh. That was really, really valuable for us. Mr. Malhotra, would you like to add anything for this?
Yeah, though my colleague has already covered everything, but then just to compliment him, see, to be very honest, let me tell you very straight that, you know, most of the cases or assignments which comes to us from NRIs, which are of complex nature, you will be surprised to know are not entirely asking about the tax complexities. It actually focuses on situations where family has financial and legal consequences because of somebody near and dear one to them has just died, and everything has been moving smooth till the time such unforeseen event happens. So what's the way forward for it? You should have at least limited knowledge of what all documents are there for all the insurance policies, all the investments in India or outside India, because you can very well experience a case where an NRI has property in India, bank account in UAE, investment in any third country, and the legal heirs are staying in altogether a different country. So this means that, you know, if you don't have any will, for example, then of course you will basically at the mercy of succession laws of multiple jurisdictions, and those assets and properties would actually be divided and demarcated to all the legal heirs as per the laws, and not the way it should be. So documentation, as I've been focusing in all my in the entire session and in all the questions which you know, people asked today, documentation is very important. So first of all, keep your entire family aware of what you have done so far and what you are planning to do. The documents and the information relating to that has been kept where, and the copy should be available with at least one more person in the family, so that in case, God forbidden, anything goes wrong, the family should not be falling under any of a trap and should not face any kind of financial consequences or penalties for not being able to comply with any particular arrangement. That's it from my side.
Thank you. Thank you. I hope everyone found this session helpful. Thank you, Mr. Singh. Thank you, Mr. Malhotra, for a very, very valuable and practical insights into actually a topic which I think a lot of times we find very complicated or overwhelming, right? To everyone in the audience who's listening, please not only take notes, take action also. I would love for all of you to go over your financials personally with your spouse, with your partner. Make sure you are legally compliant, and now as an NRI you know your your rights and duties towards the NRI tax regime too. If you enjoyed this webinar, the webinar will be available on YouTube very, very soon. In case you want to go back to some of the sections, we will share the link with everybody out here. Please help us spread the word. Share this webinar link with somebody who will find this useful. You can reach out to the NRI Advantage team on their website or the WhatsApp number. We've shared both. Book your one-to-one consultation. And if you mention IWD, you will definitely get a special offer too. Thank you very much. And we'll be back with more webinars very, very soon.
Thank you. Thank you, everyone.